Good afternoon and welcome to the FX Daily Roundup with ForexAnalytix. And we're starting to see things quiet down, or actually they've been quieted down for a bit here. I was on Face this morning. We talked about the euro, and our buy chart support had been here at 11.13, which is right where we're at. And we had shown this level here right at 11.10. We've made a couple of just minor moves below that, but we haven't been able to crack it. The only thing is with the dollar index here, also, we're just kind of hanging around here, and certainly left the door open where we could maybe gun the stops just a little bit more before coming back in, and that would have translated to the euro, maybe taking out 111. We're just sitting here, not a whole lot happening at this point. I pointed out that I was long this morning. I got out on this run with 11.20 and just a stop so I could lock in a few pips of profit if it dropped back. Sure enough, it did drop back. And I really wasn't interested in getting back long again until it proved itself, because I thought there was a potential for us to just push those stops, because one of the reasons is because, if we covered on Face this morning, is we did our analysis, at the, I do it at the beginning of the week on the basic technical. Sometimes I'll update the middle of the week, but usually with the European crossover webinar and also FX Roundup, I'm not going to pop back in again, in the basic technical, and we're in the chat room on top of that. But anyway, the analysis to kick off the week, I put on here. The euro saw a nice rebound rally from the week's lows, meaning last week's, but at the end of the day was incapable of closing above the key level 11.54. Bulls will look to buy dips to 11.13. Bears will make a stand at 11.96. And there's a little bit more, but that being said, here's that key 11.54. And I've had that one in place all since throughout, last week, and I thought that we'd actually have been at that point when Powell was speaking, and then we had the chance probably to move higher. But this euro just kept going lower and lower and lower. Eventually, we did pop up, and we got back up there and made a run. And to be quite honest with you, this is a bit disappointing with the moves that we saw in Asia on Sunday evening, that the euro wasn't able to pop up and maybe challenge up here closer to 112. So it left the door open for us to actually slide back, and slide back is exactly what it did. Made a run back here on the European crossover webinar. That's when we made it down to 11.13, and we've been hovering at that area throughout the whole time. I'll show you here on the 2-hour chart. And we mentioned here on the faces, you can see that level come right across. It's 11.10. We made a couple of dips below there. I mean, it looks like we might be starting to try and pick ourselves up a little bit after a couple of forays, but things are just relatively quiet. The dollar index itself has looked like it's about to break and then pops back up. Then it's about to break, it kind of slides back up. It's quiet trading after all the hoopla from Asia and then coming into this morning. And then on top of that, we've had a lot of mixed signals from Trump, this morning, even with the presser with Macron, and he wants to get deals done, but if it's good for the U.S., obviously that would seem to make sense. But as you know, we've seen him all over the road like a drunk driver. 1 minute he's this way, the next minute he's back the other way, then the next minute he's back one way. So it's hard to put too much credence in some of the things that he says. And if you're speaking with your pocketbook, like I said, you don't want to get thrown one way and thinking, okay, and then about that time, 2 questions later, he changes his mind, which actually I think someone on Twitter, I think it was Ivan the K, noted that he had just actually contradicted himself from 3 questions earlier. So once again, that's the kind of stuff that we're having to deal with right now. And after the move that we made, my disappointment and it came down to where our level was looking at from the Sunday analysis. But we should have seen a very good rebound, and the fact that we've just hung around at these lows opened the door for us to test lower. We've kind of taken a dip, but we haven't broken to new lows of any significance. So we're just kind of stuck here, very quiet. And for the most part, all the other markets are relatively quiet at this point. We've seen cable continuing to pare back a little bit. We did see the dollar yen make a quick pop up from Asia, but I'm saying is this morning on Face do a quick jump and then turn around and retreat from that jump. I don't know if it was some stops or whatever. I'm not sure what it was, but they quickly gave that up. In the peso, we had a pretty good run here in the peso. If you weren't on face, this is our analysis coming into the week. And so what we were talking about was the potential, if we were to goose those stops above this 1995, it would take us between 2006 and 2013. You can 2011, 2011.3. You can see the little zone I drew in here, and the high was, I think it was like 2012 and change. And then we started to pair back. So this morning we noted here some support here, and then actually held it, and we saw a little bit of a bounce. And it had a decent, okay bounce. I wasn't in it myself. I know Blake himself had jumped in it and caught some cash. But all of it's, it's very limited, exceptionally limited moves. And to a certain extent, I guess that's understandable, considering all the hoopla that we had Friday and then Sunday session. By the time we come into the States, then things have kind of quieted down quite a bit, and quieted down quite a bit they have. Now, if we take a look at the SPOOs, okay, and you can see here we saw a nice little rebound here in SPOOs. We had this, we talked about this right here in the European crossover webinar. There's a 61%, but we were on our way up there in the European crossover webinar. I mentioned this is a pretty good little level. Now they got just past it and tagged the 61%, or almost tagged the 61% before giving up most of those gains. And here we are kind of in the middle here. To me, I think it's just a real quiet kind of day. And that probably sounds a little bit nutty considering the move that we've already had in the S&Ps. But with the exception of this, when I say a quiet kind of day, is that the moves have already happened. They happened in Asia and even European session. If you look in the FX pairs, the majors, there weren't really that big of moves overall by the time we got to the European session. A lot of this stuff that happened in Asia. Now, the S&Ps, that was a different situation. Obviously, when we're taking a look here at gold, I mentioned here we had a pretty good weekly level here at 1564. Here you can see that big, huge level here. Let's get rid of this. We came up short of that, and I think Steve was, I don't know if it was Steve or it was Stellius that noted that, I think it's Steve because he came in late, mentioned that if we do lose this area and close, I think maybe below 1525, that we could really see a good pullback here. Well, we shall see. I haven't paid as much attention to gold recently, although obviously the way would be to hang on to. I've watched it, but I haven't really traded. Maybe a couple little trades here and there, but I just haven't wanted to tangle with it. I don't like to hold on for longer periods, and we've had some pretty good volatile moves in here. But when I'm trading with this kind of market, with this kind of volatility, I find myself just primarily just focusing on that. And once again, gold, the good thing about gold is very good market in the sense of not only the volatility, but the volume. You got a good volume there. But once again, I've stayed closer at home with FX. I haven't spent that much time with gold per se, other than some moves. And we talked about that from a month ago, a couple months ago, is that it's interest rates that have moved this market, not so much the dollar. Dollar's making its move with it, but it's been interest rates. And speaking of interest rates, we've seen the bond pare back a bit. The 10-year notes have actually popped up a little bit here. So once again, like I said, I think many of these moves that have transpired not only from Friday, but into this session, starting with the Asian session, a lot of those have started to peter out, maybe not so much with the yields, but I think right now the market is kind of in at least in this point, a little bit of a wait and see pattern for right now. When I say that, I was expecting one more good juggernaut move as we came into the U.S. session. Yeah, whether it was, I thought FX would be included, but obviously I thought also in the S&Ps we'd still get some big moves, and we've gotten some mixed signals, as I said, from the administration. Trump spent the weekend. If you saw his tweets, that's not me saying it. He got along, or supposedly he's getting along with everybody. I mean, everybody, even the local dog catcher. You see, oh, great meeting with Canada, great meeting with France, great meeting with Angela Merkel. When was the last time you ever heard that stuff? You see, great meeting with the PM from India. So once again, like I said, I think he's trying to spin this as a I get along with everybody type of thing. And so the market is questioning the moves, and because of the volatility we've seen, but I'm saying volatility in the sense of from tweet to tweet. One guy just mentioned it's on Twitter, a notable trader saying, you know, it can be frustrating for some. You've got this thing with the tweets, and you know, it can be profitable for some, but you have that big risk. And so I think after these moves, and I think Blake made a good comment in the week ahead video. He said, I think it's going to quiet down this last week of August. And I think after the moves we had and a lot of the mixed signals we had from the administration over the weekend, and Trump looks like he's trying to play the good guy now, or trying to play the understanding guy. He's not trying to strike out. I think the market's trying to adjust and see, okay, well, you know, last week of August, our need to go and press into any further into some of these moves. I think that's what's being translated. At least that's my 2 cents here on this right now. We'll see what gold goes and does, but I thought we'd have one more good-sized move this morning coming to the U.S. session, and we've kept it relatively quiet. And I'm saying as far as in the majors. We can go and take a look at the cross rates. And one thing I have noticed is when I was talking about earlier when I was seeing the Euro week, and we were seeing the Euro week, and you see pretty good sell-off here against the Aussie dollar. Look at that. Kiwi pressed a little bit lower also. We have seen it rebound a little bit off of these lows off the, you know, on the Euro yen, but and Aussie dollar. Look at the Aussie yen. Same thing, garnering a little bit more strength. So there's been some movements, and obviously here with the sterling versus the odd. Nice rebound here, although we've seen that give it, and we actually made some of these moves. Just to give you an idea how we've made these moves in Asia, here was the beginning of the week analysis that I did Sunday morning. Well, the sterling odd reclaimed a major level of 80.80, allowing for an initial challenge of 82.60 with the potential for 84.14. Well, holy smokes, they went past that 82.60 like it was nothing in Asia, and they almost got up here to 83.50. And then look, we turn around and given a pretty good chunk of this back. I mean, we had already made those moves. I mean, we already gave a big chunk of this move afterwards. So here we are, continuing to go in and slide back in here. And we actually had our bias chart support this morning here just above, I guess, would have been the 80.54, and we've continued to slide back here. So it's almost like I guess this gives a good idea of what we've seen here is, if you look, we had these big moves in Asia, okay? And then, look at this, right up here, you know, right these highs up in here. And then, you know, I was already making a big deal saying, hey, we've claimed 80.80, fantastic. And I'm thinking, okay, this is probably taking maybe 4 or 5 days or something like that, 3.5 days. Heck, by the time we get to Asia, this thing's taking off like gangbusters. And look at that. It's just been give back, give back, give back, and some more give back. And that's what I'm talking about, is I think that this week, maybe after this big moves that we've seen, the market will look to go and quiet down a bit here. At least that's my take on it. And let me go on and move back in to the main screen. Like you can see here with the euro, I mean, if you think about this, let's take a look at the euro. I think this is a good example here. I mean, we came from the depths on Friday. And as I mentioned on Face, I was long, you know, as it was still going lower and lower and lower. I got long like on Wednesday, and that thing just kept going lower. I did pick it up down here just on a couple of scalps, but, you know, I thought, man, the way this thing was acting, I thought, okay, it looks like we're going to 1020. I mean, I'm going to hang on anyway. I'm going to hang on till the end of the day. And if we're below 1020, I'm just getting out and it'll be a pretty good hit. But because I thought that we'd be higher. The reason why I had got that way is that long was because I thought that we would see the dollar trade lower going to Powell's speech, and then we had the chance to move even lower beyond that, i.e. the dollar. And so I thought I came in at a very good time, at a very good price, and you know, singing the blues there. Finally, we saw this rebound on Friday, but here's my take: is look at this rebound from the 1053 area all the way up to 1160. And then, so when you come back, you're thinking, okay, when you come back in here and we had our bias chart support at 1113, okay, then you're going to see a nice bounce. I mean, maybe not a great bounce, but you'll at least, at the worst case scenario, probably see a bounce up here to probably like 1140, grab some of that and maybe let the rest ride. You know, look, we're just languishing near the lows. Now, the key thing is, and that's what I put here on the bias, on the week ahead analysis, was, there we go. At the end of the day, we weren't able to take out 1154. So if you look at it just from a technical standpoint, and look, you saw how the other FX pairs really blew doors, and you're thinking, wow, we're not even garnering anything. So the opportunity was there. I didn't take it though. I had the opportunity. I thought, you know, what if we finally get this extra move, and you know, I wake up in Europe and this thing's already cruising past 112. So, but you know, this was a good opportunity. I looked at it, I'm like, well, it didn't take it out. You can probably sell it now. Actually, it dipped only to like about 1138 and then jumped back up to like 1143. So it took a little while before it finally got. So actually, you see here, there was a more and more move above 50. And then we started working lower. But the point being is you would have expected at least, a dead cat bounce of at least 25 pips, maybe, okay, let me let the rest of it run. And we're just languishing near the lows. But we haven't broken the new lows, but we're just hanging there. And I just don't see anything that's favorable right now with the euro in that vein. I'd be more happier. I wouldn't say necessarily happy. I'd rather see this thing break below 1105, hold the 1097, and then reclaim 1110. And I think, okay, now it's safe to get back in the water. But certainly I would have expected a lot more favorable bullish move in the euro at this point, considering the action that we saw from Friday. That being said, dollar yen's kind of moving around, but I think right now is, to me, I think the best choice would be just to hang back. Let's see what let the market let the day go by. Coming tomorrow, let's see what it gives us. But once again, we're in the last week of August, so we've had the runs. The market probably want to play it down. We probably won't see any bigger moves until we start to get back from Labor Day holiday. It just is what it is. That being said, thanks for joining us here on the FX Daily Roundup. And once again, I would go and consider, especially as we're starting to pick up our volatilities, consider your 10-day trial for ForexAnalytix, $1 to try. As I said, you have the opportunity to not only use the mobile app and some of the other technical opportunities that we have, especially with the data box that pops up and shows you, even gives you audible when we get the data released. But as I mentioned, not only the different types of analysis, whether it be basic, technical, macro, harmonics, Elliott wave. But to me, I always say it again once, and I say it again, which is, to me, the value is in the chat because of all the supportive traders, different styles. With that, I will see you all tomorrow, and thanks for joining us here on the FX Daily Wrap-Up.